Welcome to This Week in Money. I'm Jim Goddard. Today, Chartworks CEO Ross Clark will take a look at the very toppy equity markets this past week. Armstrong Economics founder Martin Armstrong calls 2017 the year of political hell. He says this year was the most hated bull market in history. He'd tell us where the money's been coming from to power the Dow, the S&P, and the NASDAQ. And Inside Track President Eric Hadik comments on how various business cycles are expected to do in the new year. Plus, at the end of the show, we'll have company showcase updates with American Manganese CEO Larry Reaugh, Aben Resource President Jim Pettit, and Carl Data CEO Greg Johnston. We'll talk to Ross Clark right after this.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the pink CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark, CEO of Chartworks. Welcome back to the show, Ross.
Always a pleasure, Jim.
The U.S. equity markets hitting record highs again over the week. Was it because of the hint that the tax cuts that President Trump proposed might actually go through?
It appears as we've moved into the weekend that the chances of them coming through is something the early part of the week are looking much better than they were just even a few days ago. I mean, that's the excuse for the rally, but the reality is that this market has been on fire for a long time.
We have to explain that Ross has got babysitting duties while he does this, so his junior advisors in the office are helping him out today.
Markets have been strong basically since we came out of the summer. Had that short-term pause in September, November on some of the indices. But, now here we are just passing the middle of December, and this is the point where seasonality really starts to kick in. The small cap stocks, year after year, we look at the Russell 2000 as we get into the 11th to the 15th of December to put in an interim low and then show strength through the end of the year. And, here we were on the 14th, a nice small sell-off in the Russell. We had a sell-off the week before in the NASDAQ, the triple Qs. But the midweek sell-off as far as the Russell was concerned this week is just perfect for a minor oversold to set up for the next rally, which should take us into the early part of the year. And from our perspective, that looks pretty realistic. There's nothing on the credit side really to show that there are any difficulties. So trend is in motion. Stay with it as long as it's working, and enjoy the ride.
The Fed hiked interest rates. Does that influence the market, or has that already been built in?
Oh, that was so much built in, and two rate hikes for next year with a possible third seems to be in the cards. The first one probably out in the April-May period. So the market's adjusting to that. And if we take a look at the long end of the bond market, it actually had a pretty good week this week. So if we look at the long end of the bond market, pretty good week this week. So that the curve is looking pretty steady right now.
Other influences, you called it a holiday rally, the Santa Claus bounce. Why does that happen so typically in December?
Well, I mean, typically any tax selling that's going to be done tends to get out of the way by the time you get into the middle of December. And then you're looking for new money to start looking for homes. The money managers will have done whatever selling they want to do, and they'll be looking for new positions to step into. And then as we get into January, you've got a whole new slate of deposits that are going to end up being made and looking for a home. So, usually, say that we talked about this last week, that January-February stretch where we sit right for this year in particular, moving in, probability looks very good. And I think we've got a 50-50 chance of continuing into May. But as we get into that January window, we'll have some technicals to look at that will give us guidelines as to whether it's going to have that full strength through the seasonal or whether it's going to be short-circuited.
Of course, everyone likes to make a quick, big profit, but Bitcoin and other cyber currencies, does this smack to you of 1999 and the .com frenzy that led to a huge crash?
Well, I lived through that, and yes, it's very reminiscent of that. And the example that I use is actually, rather than looking at the broad indices, take a look at what were the real high flyers back there. And the Qualcomm, to me, is the prime example of that one. The percentage moves that it made, not just in the last year of its move, but from 1994 through 1999 were just, fabulous. And when I do the overlay, as I did for subscribers last week, you could end up with a pause here as far as Bitcoin is concerned. And if it pulls back and holds above 11,000, to match the Qualcomm move in 1999, it would need to still double from there, to do what Qualcomm does. So this is the classic of a bubble, but until it bursts, you've got to play with the trends as long as they're there. Personally, I haven't put a penny into it. It's just too volatile for me. I like the price action, but it's more than most people that I know would be comfortable with.
Ross, I've heard stories already of people mortgaging their houses to get involved in the Bitcoin craze. Is it good to remember that old advice, never invest what you can't afford to lose?
Never more important than it is today. These are the number of new items that are coming out. The probability of any one of them making it is so minimal. Yes, there's going to be the big winners out of this thing, but the corrections along the way are going to be monstrous. I mean, we've had 30 and 40% corrections already, and that was from lower levels. But now you're going to be seeing them from even higher levels. So even those that end up being the long-term winners, say like a Qualcomm out of the .com, it's only back now to where it was in 2000. So it's like RCA of 1929. It took until Elvis came around before RCA was back to the same levels that it had back in 29. So with bubbles, I say only invest. If you're in there, keep your dollar values very small. Percentage gains could be fabulous. However, the likelihood of catching the right one is pretty minimal.
Ross, good luck with the babysitting.
It's all part of the season.
Thanks a lot for chatting with us, Ross.
Bye-bye.
My guest has been Ross Clark, CEO of Chartworks. You can contact him at ross.clark@chartworks.ca. Coming up, Martin Armstrong, next on This Week in Money.
Always consult your investment professional before making any investment decision.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the U.S. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the U.S. and GET in Canada. Find out more at glancepay.com.
Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Martin Armstrong, founder of Armstrong Economics. You can find him online at armstrongeconomics.com. He's speaking to us from Florida. Martin, welcome back to This Week in Money.
Oh, it's always a pleasure.
Martin, the Dow and the S&P 500 continue to hit new highs as we end or near the end of the year. We have heard predictions of 40,000 for the Dow. What do you see ahead for the Dow, the S&P 500 in 2018?
18 is going to be a much more volatile year. What we're kind of really looking at is the fact that we have what we call in our model a panic cycle year. It's largely what we're looking at on a global scale is what we call the year from political hell. That began with Brit exit, and then Trump was elected, and we've seen Merkel effectively really lose. She won only like 32.5% of the popular vote. So we're looking at around the globe, the confidence in government has been really sharply declining. And the smart money has been moving into the stock market, and this is what we've been saying all along, that, our model was projecting that we would be going to probably closer to 40,000. I mean, I think we put out that forecast back in 2009. I think it was 11. Barron's magazine just said, we were calling for new highs, kind of like a joke. Like, ha ha ha, yeah, I'm sure that's gonna happen. And, so, I mean, ever since then, you've had, really this market has been largely probably the most hated bull market in history. We passed 97 months in April. 97 months was the entire length of the bull market during the roaring 1920s. That led to the 29 high. So we are, in time-wise, we have certainly exceeded most bull markets. But, here you have, at a stage where you hit 97 months. Back then, I mean, shoeshine boys were bullish. At 97 months, everybody was still calling for a crash. So that's why I've called it more or less the most hated bull market perhaps in history. Virtually, I think more than 90% of all the so-called professional managers have missed it. They said only like a week ago that Soros was finally throwing in the towel. I mean, this is just the way it is. And when you get a market that everybody is bearish, it tends to keep going. This is what we put out a report for our clients who called, how to trade a vertical market. And vertical markets are ones that they just can't get a hold of. Everybody keeps waiting for the dip that doesn't necessarily come. So it just keeps running away, and people try to short it. They get stopped out, and I've basically said it's kind of like a party where everybody's drunk and they don't know how they got there. It's just really a very interesting type of market, but this thing can go much higher for a number of reasons. But I mean, aside from the fundamentals that are finally starting to get people looking at this thing as perhaps going up higher, has been the Trump tax reforms. But behind that we have just a systemic level of a decline in confidence in government. And people just don't trust it anymore. I mean, if you're talking about Canada, the United States, Australia, it's just getting out of control. And effectively what you have is governments borrow money year after year with absolutely no intention of paying anything back. And, I mean, the critics of Trump's tax plan, oh, it's going to cost $1 trillion, etc. Who cares? Does it really matter? You don't pay anything back. Obama increased the deficit for this first year that he was in office from $400 billion to $1.4 trillion. So, and he spent more than $1 trillion 4 years in a row. So there was effectively what the Obama, which nobody said anything about, was 400 times greater than what Trump is looking to hand back. So it's all just bias and nonsense, but nobody ever pays anything back, so why should we care?
What's been causing the U.S. markets to continue to hit new highs?
It's a vertical market, and vertical markets are ones where they just keep running. And what happens is that eventually people begin to throw in the towel, and then they start buying on a wholesale basis, and then you're getting close to the tops. Right now, we've had nothing but people looking to buy dips. Brokers that I know have said for the first time in the last maybe 2 months, people that haven't been around the stock market since 2007 are at least starting to call back and say, gee, what is going on? So everybody's expected this thing to collapse, and when you have the majority always calling for that and all the talking heads on TV, it does exactly the opposite. The majority always has to be wrong because the majority is what fuels the markets. It's if everybody's bearish, then who's going to buy it? The only people that buy it are the ones who keep trying to short it, and they have to cover their shorts. So it's just a very interesting market, but I mean this has happened historically, several times. That's why we put out reports that how to trade a vertical market. You have to understand what the differences are, and this is just one that keeps running away on you.
Is a new tech boom behind the climbing NASDAQ?
I mean, yeah, you always get sector shifts all the time. You'll notice if you really want to look at the differences between them, the Dow is the big money. And that's, predominantly foreign money. I mean, you can look at it from, for example, when the Japanese or the Chinese would come in to buy, real property, not the individuals. What do? They always buy the trophies. And, the Japanese have bought Rockefeller Center in New York. They buy the big name things. All right. And in stocks, they do the same thing. They're not interested in an IPO that's going to be listed on NASDAQ. That's too speculative for them. They want the big 30. That's what they do, where they can park big substantial amounts of money. The S&P 500 is a broader market. It gets some of the foreign money, but it's predominantly, I would say, institutional domestic money, pension funds, things of this nature. And then the NASDAQ tends to be more of the retail speculative market. So you'll notice in a bull market like this, what has led all the way up? And it's been the Dow. Then the S&P comes in, and then the NASDAQ comes in. When it finally peaks, you'll see the Dow will peak first and start to decline or go sideways to lower. S&P will be the second one, and the NASDAQ will be the third.
Does the U.S. tend to have market shocks every 10 years? In 98, it was long-term capital management. 2008, the Lehman Brothers. So does that mean another shock is due in 2018?
2018 is going to be a big volatile year, but no, those were each different. The long-term capital management crisis of 98, that was caused by over-speculation in the Russian market. And when the Russian bond market collapsed, what happened was that because there was no liquidity, then they start selling everything else to raise money. So this is the danger that you have to understand that exists. It's really what we call a contagion. And this contagion is what really breaks things apart. Our greatest risk going forward is we have a liquidity crisis. And liquidity is only about 50% at best of 2007 levels. Most of the retail, not in the market. The governments have been just looking to raise money on everything possible, and what they've done is they've chased a lot of the banks out of the industry. So they're no longer really participating in market making, things of this nature. And I mean, I know one of the lawyers that was for one of the big banks who left, and he basically said what's going on is that the government walks in and it says, we want $2 billion and you're going to give us a $2 billion fine. And so what happens is they say, we don't care what the law is. We don't care what your defenses are. This is what we want. And the banks have been paying these fines. And it has led to the impression that they're too big to jail. And what's really going on is that there's deals cut behind the scenes. All right, they will pay like a $2 billion fine. And what happens is then the government protects them and nobody can file a lawsuit against them. You had, after the dot-com bubble, I mean, all the big investment banks paid a few $1 billion in fines for putting out false research. All right, every class action lawsuit that was filed against them, about 26 of them in New York City, were all dismissed by Judge Pollack. And he says, oh, well, you should have known. So how can they plead guilty, pay these big fines, but then they can't be sued? It's part of the deal. The government says, you give us this money and we'll protect you and any lawsuits will be dismissed. If you don't pay us, then we're not going to protect you and the class action lawsuits are going to take you down. So it's been like an old mafia protection game. And this is what all the governments are doing. They're just coming in with huge fines. And you take the LIBOR scandal. I mean, that was, a joke. Saying, oh, manipulation. They did not manipulate the interest rates, change the trend. Yes, what they've done is what everybody has done in the industry. Okay, where are the stops? And they move it up 2 or 3 points to get them. But it doesn't change a bull market into a bear market. But the way the government portrays it, they've actually changed the direction of interest rates, which is nonsense. I mean, the central banks do that. And so they just pay these huge amounts of fines, and then nobody gets sued. All lawsuits are dismissed. So the banks have been really creating reserves to pay these fines. And who pays that? It's basically the customers. So a lot of banks now are just simply shutting down their proprietary trading because it's getting outrageous. And they come in and say, oh, well, you made $2 billion, we want $3 billion. And this is really what's going on. So it's creating a liquidity crisis, and the next crisis that we come into, which may not be until about 2021, but it's going to be far worse than 07 to 09. Because there's a lack of liquidity, and that's what the long-term capital management crisis was. The dollar yen went from 147 to 103. All right, and in a matter of weeks, because there was no liquidity. They were selling anything they could get their hands on to raise money. And that's what you're going to see the next time.
We'll have more with Martin Armstrong next on This Week in Money.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Reaugh shear zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN.AF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forrest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
I'm Larry Reaugh, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, AMY, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Reaugh, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. We're speaking with Martin Armstrong, the founder of Armstrong Economics. Martin, the junior stock market seems to be heating up right now. Do they run higher in junior stocks towards the end of a bull market, and do they signal that a bear market is around the corner?
I mean, a bear market's not around the corner. Traditionally, what would happen? Yes, you sell the stock market, and what happens? There's a flight to quality. Everybody runs to bonds. Do you really want bonds at negative rates? We're in a bond bubble, not a stock market bubble. And as I've said, governments just never pay anything back, ever. So why would you want debt that the government can change the rules on at any time? And I warn my clients, for example, Italy, when they couldn't pay back, they took 30-day and 90-day paper and they suddenly said, oh, okay, fine, this is now 10-year bonds. And you don't get your money back. He who has all the guns and the tanks and whatever, they make the rules. Anybody in the private sector, if you did that, I mean, you'd go to jail. That's it. Government, they can do whatever they want at any time. So I advise my clients, number one, that big institutions get out of government bonds, period. And municipals, state, local, whatever, right up to federal. The only federal bonds that are relatively safe for at least a few more years are U.S. But other than that, you just got to really be careful. And I would switch to corporate. Corporations can't change it. And if they go bust, you get actually something back. All the assets are sold. If the government goes bust, what do you get? Nothing. I mean, you can't take it's totally unsecured. There are no assets behind it, and you can't run down to the local art museum and start lifting Picassos. So you get absolutely nothing for it, and not one single government has ever survived historically. They always default. That's not the case in private sector.
Is the U.S. dollar, the petrodollar, likely to be challenged in the new year by the petro yuan and the petro ruble?
No. I mean, first of all, that is such nonsense. It's unbelievable. I mean, if anybody dared to look at the numbers, you'll see petrodollar. The dollar is no longer linked to oil. I mean, that's absurd. I mean, oil is less than 7% of the world economy. The U.S. is fully basically it's a net exporter at this point. This is not the 1970s. I mean, people keep saying, oh, the petrodollar or what. Who cares? Oil is not the lifeblood of the world economy anymore. It's just not. So, what is the strength of the dollar? The dollar is basically the place and the only place big institutional money can go. They're not going to buy, yuan bonds or ruble bonds. I mean, this is nonsense. Why, the Chinese are desperate to try and get their money out of the country because it's illegal. All right, they were using Bitcoin to do so. This is why the real estate market in China has gone to astronomical levels. Why? Because they have no place to put the money. They can't get it out of their own country. So they've been buying basically real estate. So you have these real estate that everybody is analyzing according to Western standards. Oh, it's got to be a bubble. This stuff is going to crash. It's the only place to park money for Chinese. So that's what's really been going on. It's a different market. It's not everything is the same.
Is the U.S. dollar key for the prices of gold and silver?
Well, yeah, the dollar is basically, when we're going towards a monetary crisis, all right, and there will be a reset, kind of like Bretton Woods. They're going to have to come up with something else. And even when I'm in meetings in Washington, there are many people now that realize that they don't like the fact that the dollar is the reserve currency. I mean, you've always had these things. When they formed the G5, part of the G5 in 1985 was the U.S. yelling at Europe, look, you have to create a single currency to compete with the dollar. Why? Because the dollar was up so high. All right, the pound fell to 103. The U.S. is different than Europe. They want a lower currency. If you cheapen the currency, your exports increase. This idea that a strong currency is good for the economy, I mean, it's really kind of nonsense. It's deflationary, not inflationary. So, there are a lot of people that would like to have the dollar not the reserve currency, including the Federal Reserve. I mean, the Fed wanted to start raising interest rates back in 2014. What happens? The IMF was lobbying against them. All the other foreign governments were lobbying, saying, please don't raise your interest rates, because if you do, then you're going to hurt us. So the Federal Reserve has become the reserve currency and central bank for the world. They've lost domestic policy objectives, and this is the major complaint behind the curtain. That if the Federal Reserve wants to manage the U.S. economy, how can it when everybody else is screaming at them? So it's been U.S. I mean, Janet Yellen, I thought, has done actually a very good job. She stood up against everybody and said interest rates have to be normalized. Why is she saying that? Because pension funds needed 8% to break even. This is what all the pension funds are based on. So what do we have? The next crisis you're going to see is a major pension fund crisis. California CalPERS. California wants to raise taxes because CalPERS lost money. And that's the biggest pension fund in the U.S. So, you have the same thing throughout all the German pension funds are bust. Nobody can earn any money, and every pension fund is at risk because these interest rates are excessively low. So the governments have totally screwed everything up, and the ECB in particular is the one that is at the greatest risk of actually going belly up. And people go, how can the central bank go belly up? Because they're not the same as the Fed. They don't have the ability to just create money at will. They have to go back to Parliament and ask for permission. The difference also is everybody was talking about, oh, the Fed and hyperinflation, et cetera, all right? Well, you know, $3 trillion on $20 trillion national debt is not that much. How much does the ECB own of the national debts of all of Europe? 40%. If they raise interest rates, their own portfolio takes a crash. The ECB will lose so much money, and this is why the ECB has been basically reluctant to raise interest rates, because they're trapped. They have totally lost all control of the economy. They've attempted to stimulate, and they're just beyond hope. Completely beyond hope. You have the Italian banks in trouble, the German banks are in trouble. I mean, it's just been, you know, pathetic what's going on over in Europe.
If the banks are in desperate trouble, are we going to see the same kind of action there that we saw in Cyprus, where they dip into people's bank accounts?
Yeah, I mean, this is what they basically have done. I mean, they've made it possible that all the European governments, all right, and including Canada, has passed rules that allow bail-ins instead of bailouts. And so Europe is exceptionally vulnerable. And see, this is the problem. You have a clash between the fiscal policy of politicians and the central bank policy. All right. You have central banks that tried to stimulate, therefore creating money, and what did you have on the fiscal side? Oh, we can't bail out these banks, so it's deflationary. So the two have been clashing back and forth, which is why there has been no hyperinflation or all this other nonsense that people kept talking about. You have to look at the whole thing. If you increase the money supply, that's very nice, but then what did the Fed do? The banks complained. So then they created excess reserves. So how much went into the excess reserves? Trillions of dollars. So it's sterilized. You think they're adding money to the economy, then you look on the other side, it's all been taken out anyhow. Then you had China saying thank you very much. They sold all the 30-year bonds and they lowered the maturities to an average of five years or less. So, I mean, none of this stuff has worked.
Is the price of gold key and tied to the U.S. dollar?
No, not really. I mean, gold has taken some serious hits in the sense of governments are so aggressive looking for taxes that, look, 20 years ago, you know, you could buy gold, you could put it in a briefcase, hop on a plane, and leave the country and go. You can't do that today. And, you know, they're going after everything possible. And gold has lost its movable quality. About the only thing you can do with it now is basically bury it in the backyard. That's about it. You can't travel with it. So it has lost its ability to be that hedge against the currency as it used to be. I mean, it's still going to go up as with everything else in general, but as a alternative to the dollar, no, not really anymore. Things have changed.
In the U.S., do you see interest rates in the debt markets moving faster than the bank rate?
Well, the banks have basically been making a ton of money. And, I mean, if you go look at a car loan, they basically want 4%. And what do they pay you on a deposit? You're lucky if you get 0.5. So, I mean, the spread between what banks are paying and what they're charging, and then you look at credit cards up to like 20%, some of them, it's outrageous. And of course the governments don't really protect the people, but I mean, I mean, you're always going to see the bank rate, much, much higher than actual cost of funds. But we're going to start seeing next year more of a collapse in the confidence in government. And as that develops, you then begin to see the government interest rates rising. I mean, a couple of our major pension funds that, actually do listen and have double-checked everything, they've gotten rid of all the government bonds. And, one of them was in Canada. So when S&P walked in and says, "Oh, you're taking on more risk, you're buying corporate," and they said, "Okay, fine. Here you go. This is Armstrong study, and we double-checked it." He's right. Government doesn't, never pays off, and AA, AAA corporates, they pay. So where are we taking on more risk? S&P didn't know what to say. They turned around and walked out.
What's your outlook for gold in the new year?
Still down near term, and then we should begin to start to rise. But keep in mind, what's going to cause the rise is largely a collapse in the confidence of government. And if you walk down the street and you ask somebody, you think the government's going to default, they're going to ask you where your tinfoil hat is. The average person doesn't believe that. So until the average person believes that there's a problem, you're not going to see the metals take off and all this nonsense about petrodollars and hyperinflation. That's very nice. People can sell their newsletters on it and get on TV yapping away. And they've been saying the same thing for almost my entire life. Hyperinflation, all this from the 70s on. That's all I've ever heard. All right, and they don't even understand what hyperinflation is. The German hyperinflation took place. Why? Because there was a revolution in 1918, and they even asked Russians to come in and take over the country because they wanted to be communists. Now, if you had money in the bank and you just saw what they did in Russia in 1917, are you going to stay there and keep your money and say, "Oh, okay, fine, maybe it'll be all right"? No, they withdrew everything and they took it out of the country. There was nothing left. So yes, the government had to just print money to make the reparation payments. That's hyperinflation. All right, we're not at that stage yet. You have to have a collapse in the confidence of government. It's coming. All right, should start next year, but from there all the way out into the mid-20s is when we're going to start seeing this trend build. As that builds, then you'll begin to see tangible assets rise.
Are lenders around the world continuing to increase credit or starting to restrict credit?
Depends upon the area. Some areas are definitely restricting credit when it comes to real estate. But again, it's kind of like the S&L bubble. The government, once the government put in restrictions on credit and on real estate, and you couldn't get the amortization, etc., they ended up creating a one-way market. And you're seeing the same thing with real estate on a global scale. The new president, head of New Zealand, we're going to put, blocks on no foreigners can buy real estate. Australia, they made it a criminal act for a foreigner to own real estate and not reveal it. London, they put on a stamp duty tax. I mean, property's declining in most of these places. In Europe, because interest rates were negative, they were handing out real estate loans like it was, Halloween, handing out candy to kids. So they were doing exactly the same thing, no credit worthiness. They don't care. They're getting, 5-8% interest. That's what they want because if they looked at the central bank, they were getting, negative.
Throughout history, are there any examples of debt bubbles that did not burst?
No.
Is debt
I can't
slavery?
think of any.
Yeah, right. Is debt slavery the new politically correct form of slavery?
I mean, this is historically what always happens. It's, probably the most dramatic one was the city of Mainz in Germany. They borrowed money, and that was the mecca for the economy. That's where the Gutenberg press was invented, and so they thought all this money was just going to keep going, because it was kind of it would equate it to like a dot-com bubble. And they kept raising taxes so dramatically, people just said, hey, wait a minute, if I move to the city next door, I don't pay this crazy tax. And they did. So all it did was raising taxes chases people out. They then couldn't pay back their debt, and so they defaulted. They were then invaded by, their creditors, and the city was sacked and burned to the ground. I mean, that's the good old days. But I mean, we're heading towards that. I mean, this system is unsustainable. You have a pension crisis that is monumental. I mean, people expect to, their whole lives have been based upon this Marxist idea. And what they don't realize is that government has hurt the private sector pensions because with the low interest rates, and then in the public sector pensions, they never put the money aside because they always assumed, like the city of Mainz, that we'll always be able to tax the fools. They're dumb enough, and we can just tax them. And you're getting to the point that's not working.
Has China's credit boom caused the world to be flooded with debt from China?
Well, like I said, China's debt is interesting. There are differences there. They're excessive on the debt level, mainly because the Chinese have not been able. It's not a free currency. They can't simply take their money and leave. So they've been pouring it back into real estate, and so you have, yes, a lot of these condos and things that are going for millions of dollars, which is incredible prices, and nobody's living in them.
Are there a number of factors that could affect the oil market in 2018?
The main thing that would really affect oil is largely the prospects of a Middle East war.
Is the rush to electric vehicles causing bull markets in some of the base metals?
Yes, but I think a lot of people are now beginning to realize that the idea of an electric car actually supplanting combustion engines, you're looking at probably another 70 years. We're going to have to come up with something a lot different. I mean, how do you charge your cars when people are living in high rises in the cities? There's not enough charging stations around, and so I mean, I think it's look, the fax machine, people may be surprised, but it was actually patented during the 1860s. It took 100 years before it came to the market. So you're looking at largely the same thing. It's electric cars. I mean, are interesting, but the prospects of it actually displacing sizable amounts of the combustion engine cars is not likely in the United States or North America. In Europe, gasoline is so highly taxed. What you see over there in prices is per liter, not per gallon. It's quite, the whole socialistic system in Europe is very, very abusive, and people don't realize that you're looking at even like the tax rate that Trump was complaining about here is at 39.6 is the top tax rate. You go to London, it's 47%. And that's lower than most places. By the time you get done in Germany, you're lucky if you get, really 30 cents on the dollar. You got VAT taxes, or like sales taxes, at 20%. Plus you got income taxes. And you're taxed on everything under the sun. And the governments are still broke.
Bitcoin, cryptocurrencies, and blockchain, are they ushering in a replacement for fiat currencies?
Well, people don't, they use the term fiat as if it's paper money is fiat, and it's not. Fiat means a declared value, all right? We had that under Bretton Woods. They declared gold at $35 an ounce. As long as everything floats, a currency float, it's not a fiat system. All right, but, Bitcoin is no different than the U.S. dollar. It floats. That's it. The worst part about it is that it's not a real viable currency. You have, 16 million outstanding, and that's it. It's more like a share price. It's a .com bubble. It's not something that's going to replace the dollar that everybody in the whole North America alone could use. Come on. There's more people than that in New York City. So, it's not a viable replacement for paper money. The governments want to get rid of paper money because they want basically everything electronic anyhow. Why? Because then they're going to be able to tax you on absolutely everything. You're not going to be able to find a quarter in the parking lot and say, gee, where's our 12.5 cents?
Do governments want to create their own cryptocurrencies?
Yeah. There's no question about that. Even Bitcoin, nobody really knows who invented it. There is reasonable speculation the government did it themselves to get people interested in it to begin with, and then seize it, and then they come in with their own. You would think if somebody developed blockchain, they'd be out here asking for royalties or something, or taking credit for it, appearing on a nightly show saying, yeah, I'm the guy that created this. Nobody even knows who it is.
Are governments likely to criminalize private cryptocurrencies?
Yes, that's already happening. You've got China looking at it, you've got Europe looking at it, and the U.S. It's criminalizing it from a different perspective of where's their share. And anybody that thinks that you can go to a cryptocurrency and not pay taxes, good luck. They will probably take your house, your everything, and like I said, they got the guns in the tanks, and they can change a law at any time. And what do they do with this stuff? They just simply say, oh, terrorists use it. Now everything is for terrorism. You got to take your shoes off when you get on a plane. It's ridiculous. They use that excuse for absolutely everything. One of the girls in our European office simply sent 200 euros to her father, all right, and she gets called down, where'd you get the money? 200, that's it. She has to explain, oh, okay, fine, and prove that she had a job where she could get the 200 from. Where'd you get this money? It's absurd.
Well, when you said governments want a piece of cryptocurrency, South Korea right now is considering a capital gains tax on Bitcoin.
Sure. You have the same thing going on in Europe, and you have the same thing going on in the United States. And I wrote a piece about this. It depends upon what the definition is the government applies to it. Is it a currency? If it's a currency, you owe us right now, it just printed 18,000. That's a profit. The whole thing, 18,000, give us our share. If it's a stock, then you don't pay tax until you sell it. It all depends upon your definition. And how are they going to define it? If they define it as a currency, that's the worst. Your exemption maximum is $600. That's it. Anything else over and above that, you have to report how much you made, and if you didn't, there's interest, penalties, and criminal violations as well. So, Bitcoin honestly should have just not called it a currency, just said these are shares in the company that issues the currency. That would be different. Calling it the currency? Wait a minute. Now, where's our money? You made it already. And if it's a currency, you don't have to sell it.
A number of junior resource companies are now turning into cryptocurrency or blockchain companies. Is this cryptocurrency blockchain market comparable to the .com bubble?
Yes. I mean, look, there's so many different currencies running around now. Who's going to accept them all? And if you accept them, okay, fine. If we sell services and the Bitcoin is 20,000 today, and by the time we go to try to convert it, it's now down to 15. No, thank you. Not interested.
Has China been able to stop the flow of money out of the country?
Not completely. I mean, there's always different ways of doing it. A lot of the trade statistics were significantly altered because China didn't realize what they were doing, what was going on. Any companies that had a license to deal internationally, they were using Hong Kong back and forth to get money out.
Will the Trump tax plan put pressure on Canada to lower taxes to be competitive?
It's putting pressure on everybody. I just got back from Europe last week. I had to go meet with some people in Parliament over there. They are scared to death. The German auto industry said, hey, you're going to have to compete here. I mean, effectively, governments have been abusing corporations for way too long. Who owns most of them? It's pension funds. All right. So they've taxed the same money 3 times. The company makes money, so it pays a corporate tax. It now wants to pay out the dividend, it has to pay a dividend tax. Then you receive the dividend, and then what happens? You have to pay income tax. The same money 3 times.
And in Canada, we have sales taxes, so you pay it again.
Exactly. I mean, you're taxed on everything constantly. And government produces nothing. It promises the moon, and it does absolutely nothing. Every time you get one of these elections, and what happens? Oh, we're going to go tax the rich, and we're going to get those, and they call them every name under the sun. Fine. Does it ever lower anybody else's taxes? No. All it ever does is put more money in their pockets. I was down in Australia, and they said, they were putting in the luxury tax. We're going to make those rich people pay. We're going to tax and the slogan was, we're going to tax their Ferraris, their fur coats, and their French wines. And everybody cheered. All right? Every time I went down there, I only saw like maybe 2 Ferraris in Sydney because they were already taxed 100%. Nobody wore a fur coat because it was too hot. And everybody always gave me Australian wines, never French. But it was a great slogan. Everybody voted for it. What would they find out? What was included? All electrical products. You bought a TV, you bought a radio, everything was taxed. Suddenly, all you were entitled to was a tent in the field. And that was it. If you used Wi-Fi, that's electric, you got to give us a tax. Luxury. So, look, government is basically the biggest con job you've ever seen. I mean, it just keeps growing and growing and growing, and it takes, a huge chunk of the gross national product. On average, it's about 40%. And they produce nothing.
We keep hearing Canada has debt bubbles. What's your outlook for Canada in 2018?
Well, I mean, it's Trudeau is basically just taking the whole thing and going crazy with it. these people just have this Marxist mentality. And they don't look at the numbers, they don't look at any of this, and the more you raise taxes, the lower the economic growth is, period. I don't care what country you're talking about. You lower the economic growth, and what happens? Unemployment rises. In Europe, you have, they call it the lost generation. Unemployment among the youth has reached 60% in Southern Europe. 60%. In the Great Depression that everybody talked, oh, it was a depression, it was horrible, and people jumping from river, out of windows and stuff. What was the unemployment rate? 25. 60% is a slightly more than 25%. And they call it the lost generation. Government, has become our greatest enemy towards economic growth and the stability of our future. They just consume everything and waste it. It's just not doing anything.
How is Prime Minister Justin Trudeau perceived on the world stage?
Not real favorably. They more laugh at his socks, but other than that, the same thing with, Merkel, all of them. Britain doesn't really have a politician that stands out. Europe doesn't even have one. If you ask most people outside of Europe, they think Merkel's the head of Europe. She's the only person they've ever seen. And she's just Germany. Trump, you have CNN, ABC, CNBC, doing everything they possibly can to overthrow him. It's amazing. Who do we have really anybody in the political world that can stand up to all this nonsense? It's highly debatable.
Are ETFs a safe investment or an accident waiting to happen?
Well, the biggest problem with any type of ETF or something is the market makers. And as long as they get deep pockets, okay. But if they're, if it goes against them, will they be able to make market? We have one girl in our company that one of these cryptocurrency things, and all of a sudden she tries to sell, oh, well, we have to verify that it's you. For 2 months they've been asking for documents. She has to send in this and that, and, oh, well, we're not sure this is really your money. It was okay while she was trading, and then she wants to sell something and she can't. A lot of this is just outright fraud.
What do you see ahead for real estate in Canada, the U.S., and around the world?
Real estate is basically overall in a declining mode now. You still have some places there in Vancouver with the Chinese trying to get money and just parking it, and they're doing this, they do the same thing over there in China. But I have a friend who's a real estate agent in New Jersey, and he said if the property values for the average home ever got back to 2007 levels, he said half the state would be up for sale. The high-end market, which was going, Connecticut, Miami, New York, London, Sydney, Toronto, what's happened? Governments have been going after them and passing all sorts of different, criminalizing it or taxing it. London put a stamp duty on it. The U.S. Ordered that title companies have to go through every corporation to see who's really behind it, and that they applied that to New York and Miami. So it's been, real estate has seen its better days, that's it. Now you'll see the shift more towards equities, that's it. It's more or less the last place for serious money to park anymore.
Do you see anything positive in geopolitics?
No, not really. A lot of posturing. The biggest concerns more is for a Middle East war. You're having this rise up between the Sunnis and the Shiites, Saudi Arabia versus Iran. And it is building. It is definitely building. And as the economy turns down, they need, to keep people occupied. War is something that often is started to divert people's attention from their own governments.
What sectors are you investing in right now?
Well, I advise way too many institutions globally, so I'm personally not allowed to invest. But I would say, just mainly, the main thing I'm looking at is right now is still the blue chips for a while. After that, and you start seeing the S&P overtake the Dow, then you're looking at closer. But we have some resistance in the Dow in the mid 25 zone to 26. After that, there's a little bit more around 28, but really the significant resistance doesn't come into about 36,000.
With almost a year in office, how is President Trump doing?
Well, despite mainstream media, he's actually been doing pretty good. You talk to, honestly, politicians off the record, and a lot of them envy him. They say, man, I wish I could actually just say what I really thought. So there's pluses and minuses. A lot of people think that, Trump is crazy, but on the other hand, what the heck he actually is thinking. Whereas these other politicians, they just lie all the time. So it's interesting, but highly debatable.
Have you ever met the Donald?
At a party in New York. No, I don't advise Donald Trump.
How's your movie, The Forecaster, doing?
Good. They're actually converting it into a Hollywood movie now. I guess the success of The Big Short, they want to basically do that. Oliver Stone was the first one running out to trying to get his hands on it, but he wanted carte blanche on what to do, and I didn't feel comfortable with that, so I said no. But of course, I knew he would be interested. Why? Because of the Russian connection. But a lot of people would like to show this because effectively the U.S. was interfering in the Russian elections, and that's how Putin even got in.
Martin, just before we go, can you tell us a bit about Armstrong Economics and how people can subscribe?
Mainly, go to our website, ArmstrongEconomics.com. You can go on where we have, we're opening up our computer systems for the average person to use. We call it Socrates. So it's writing reports. It's a fully functioning artificial intelligence system that actually writes the reports on virtually everything around the world that moves. So you don't have to worry about bias or analysts, who have one particular view versus something else, or did he have a good night last night? Did he drink too much? He had a headache and he didn't look at something. So it's different. We are one of the few, if maybe the only one, that has a business license in China. China granted us our business license because they know that it's completely written by a computer. They don't have to worry about and hidden in paragraph 3, by the way, overthrow your government. So it's a computer that writes everything, and it's really the way of the future. That's it. Analysts are being kind of pushed out. And we have MiFID II coming in Europe in January, and so institutions can no longer hand out the research, and they have to actually charge for it. So, I mean, up to now, clients have been, they more look to us than they do to the banks, because the banks have been caught putting out bogus research way too many times.
Martin, thank you so much for being on This Week in Money.
Well, thank you for inviting me.
And best of the season.
Oh, best to you too.
My guest has been Martin Armstrong, founder of ArmstrongEconomics.com. He was speaking to us from Florida. Coming up, Eric Hadik, next on This Week in Money.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE, symbol CRL, and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. We're speaking with Eric Hadik, the president of InsideTrack.com. Welcome back to the show, Eric.
Oh, thanks for having me back, Jim.
We're doing our look ahead, look back show. How did the year work out with the cycles that you use to work on the markets?
Well, a mixed bag, I would have to say. Some of the markets adhered very closely to the cycles I'm looking at, and some deviated pretty significantly. So it's definitely a tale of two sets of cycles. One of the things that I thought would be the most significant of this year, coming into the year, I kept calling 2017 the transition year. And that was based on multi-year, multi-decade cycles where I thought we'd see one particular movement from 2013 into 2017 and an opposition contrasting move from 2017 to 2021 in a lot of the corresponding markets. So 2017 was expected to be more of that volatile shifting from bull to bear or bear to bull market. And I thought that the dollar would be one of the things that kind of highlighted that or gave the signs of that.
And so what did you find happened?
Well, the dollar was very closely adhering to those longer-term cycles, looking for a rally into late 2016, early 2017, and then a multi-year decline coming from there. And at least the initial phases of that have been validated. And in the bigger scheme of things, what that was describing or fitting into is this 40-year cycle of currency wars, is what I call it, and why I thought that the dollar would deceptively look strong leading into 2017, and then that its fiercest competitors would start to emerge in 2017 and that start to intensify in 2018, 2019. And so the dollar peaked in early 2017, saw a pretty good sell-off into September and has kind of consolidated since then. In the beginning of the year, gold, one of those dollar antagonists, saw a nice rally that adhered very closely to the first half of the year expectations, which were projected to be about a 4-month rally in gold, followed by about a 2-month pullback with a secondary low expected in mid-2017. But it was after that mid-2017 point that the other dollar antagonist really came to the forefront, and that was the cryptocurrency. And they seem to, particularly Bitcoin, has really taken on that mantle of anti-dollar for the last 6 months. And I think that there are some really important clues and validations from that to take forward into 2018.
Yes, a lot of people have also said Bitcoin has sucked away money that normally would have gone into gold and silver. Any indication of that?
Yes, I believe that is true, and like I said, these much longer term cycles that I've described, this 40-year cycle going back to the founding of our country, and it even goes back many centuries before then. And every time it times a battle between fiat currency and hard currency, and this time something new in there, the digital currency. But it certainly is something that's competing with those anti-dollar, anti-fiat currency investors that want to put their money elsewhere. And it does seem like Bitcoin has certainly detracted from the allure of gold that you would normally see in that mentality. And part of that, too, is that the dollar has not, it saw a nice significant initial decline, but it really hasn't gone into that phase where there's a little bit more of a panic or safe haven reaction from investors. And if and when that happens, which I'm expecting it in 2018, that's when you could see both gold and silver as well as your cryptocurrencies benefit from the fiat currency selling off.
Because of this new trend, people are making a lot of money in Bitcoin. South Korea is thinking of putting a capital gains tax on it because they say it's not acting like a currency. It's acting like it was tulips or some other speculative commodity.
Yeah, and that certainly is just one example or symptom of the growing pains that Bitcoin and the whole cryptocurrency arena is bound to have in the coming months and years. What regulators decide they need to do with it. And even though, its whole allure is kind of the anti-regulation and anti-oversight mentality, I don't think you've seen the reaction from the regulatory bodies yet that could really cause a struggle for Bitcoin, or at least a significant setback as investors figure out what place it has. You may have your still hardcore Bitcoin investors in there, but many of the Johnny-come-latelys who may have just jumped in the last couple months and saw some, remarkable gains, they're also the hot money that disappears very quickly, too, when there is any sort of adverse news or indications on the horizon. So I think that is what you're describing with South Korea is certainly something you're probably going to see in different countries and even the U.S. in the coming months or years.
Well, it's now being bought and sold on the Chicago Exchange. Does that bring some regulation into it?
I think it brings an attempt at regulation, and I think it also brings kind of that from a regulation standpoint, going from under the radar to above the radar, which can sometimes be a detrimental thing. It would just take, one of these moves where it goes parabolic up or down in a 2 or 3 day period, and the exchange can't deal with that, and, it's lock limits because they've got limits set in there, and then there's investors that can't get in or out of positions. That will certainly bring more attention from the powers that be and the oversight regulators. So I'll be interested to see too if this launching of the futures contract times any significant turnabout in Bitcoin, because in the lead up to it, you had that mentality that it's being validated, it's going to be given more credence by this, and there's often with events like that and news like that a buy the rumor or buy the expectation and sell the fact type of reaction. So it'll be interesting. I wouldn't make a bet or take a position one way or the other just on that single adage that you often see with markets, but it certainly is worth watching right now.
Going into the new year, what do you see happening with oil?
I think that oil is still tracing out a bottom, a multi-year bottom, but the surge that we expected from the third quarter into late 2017 has given some powerful, not just clues, but confirmations and indicator triggers. Looking into 2018, there is a pretty consistent weekly and monthly cycle that's coming into play in crude early in the year. That is when I think we could see another pullback low, and from there perhaps launch higher. So I think it is a case that crude also went through that same kind of transition phase in 2017 and is slowly beginning to come out of that base and build a bull market, but it's not going to happen all at once.
Commodities, how are they going to do?
That really right now comes down to an individual basis, but if the dollar does what I expect and does see another leg down, I think that's when you could get commodities rising, at least on a few-month basis, rising in tandem, and that dollar weakness being kind of the tide that lifts all the commodity boats. But I'm still looking at a decent year in 2018, but 2019 is still when I see more of an accelerated move up in a lot of key commodities.
Do you expect to see a major correction in the new year?
In the equity markets?
Yes.
I think that it certainly is overdue for that. I've been looking at there's multiple multi-year, multi-decade cycles that peak in 2017. The markets have absolutely held up longer than I expected, and that has allowed them to reach what I call these extreme intra-year upside targets. But I do think that you could see even maybe a couple of decent corrections, because the first place that I'm looking for a low is in around March of 2018. And just like in the last couple of years, when you identify those lows, those potential cycle lows, it's often the weeks leading into that you see the most significant drop. Just like in August 2015, January 2016, that the majority of the decline happens in the final couple weeks of that cycle. So I'm certainly looking at that February-March time frame, but a a top could certainly take hold before then. It's just the majority of the expected decline or correction could wait until February, March.
Are marijuana stocks acting kind of like Bitcoin, because they seem to be doing nothing but climbing?
They are, but I have only followed them on a very cursory basis. So other than just that general observation, I wouldn't feel knowledgeable enough to really comment on them.
Eric, can you tell us a little bit about Inside Track?
Well, Inside Track is an advisory service that incorporates cycle analysis as kind of a backdrop, but then takes that analysis to very specific technical analysis and specific approaches to the markets. As I emphasize to my readers, the cycles and some of these other more subjective analysis like AMY.V and related are the backdrop. They're something that just gives you some general expectations, but then you really need to focus on specific signals, and that's what we provide for traders on a weekly and intra-week basis, and also on a monthly and longer term basis. So that's in a nutshell what we provide.
Eric, thanks for being on the show.
Thanks for having me back, Jim, and have a great holiday season and a happy and healthy 2018.
My guest has been Eric Hadik, president of InsideTrack.com, his website 40yearcycle.com. He was speaking to us from Chicago. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Martin Armstrong, and Eric Hadik, and thank you for listening. Plus, at the end of the show, we'll have company showcase updates from American Manganese CEO Larry Reaugh, Aben President Jim Pettit, and Carl Data CEO Greg Johnston. If you have any questions for the show, you can email us at info@housestreet.com. Best of the season, everyone. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at TalkDigitalNetwork.com. This Week in Money is a production of House Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HouseStreet.com.
I'm Jim Goddard. I'm speaking with Larry Reaugh, CEO and President of American Manganese. Best of the season, Larry.
Best of the season to you, Jim, and we'll probably talk again before the Christmas.
Yes, when Santa brings you his lump of coal for you. Larry, you're making headlines, and for once, you're making headlines for all the right reasons.
Well, Jim, that's been a long, hard chore to get the company front and center, but it's finally there, and we're feeling very satisfied about that. And we've got so much activity happening in all that regard that it's very gratifying for the people that are working for the company and the people at Cometco. And just before I go on that, I would like to say that I know I said I'd have a press release out this week, but I didn't get enough information to do one. And we had several meetings, one-on-one meetings and everything this week, and the time just went through. But getting back to the headlines, and not necessarily where we're in them all the time, but the one that I really liked was the lithium-ion battery recycling market worth $23.72 billion U.S. by 2030. Now that's a lot of money, and if we were to get a portion of that, even if it was only 10%, that's a big business. And by 2030. So I see a definite future. When I was at the battery conference in Lisbon, they were talking about recycling being 15 years away. Now they are actually much more positive and talking about getting something going right away within the next 2 years, which just kind of fits our pistol. because, at that time, we may be up and operating on a commercial basis. And that is really the ultimate goal of the company. Now, recycling, we're not considered a recycler yet because we're not recycling. We've got patent pending technology that tells us we can get 100% of the cathode materials back. But the recyclers out there, we don't know what they're getting back, but most of it's burning. The ones that get all the headlines right now, like Umicore and even Glencore, they're all talking about being the recyclers of today. But, they're only getting fractions of the metals back, and most of the time it's just a cobalt, maybe 50%, 60%. And we, on the other hand, are saying, hey, take a look at us. I mean, we've got a solution here that is totally environmentally friendly, and it's totally closed loop, and we'll put nothing back into the environment, and we'll take every dollar off the table or value off the table from what we get to recycle. So that makes us different. And I was just talking to Cometco. They figure we got a couple of years on everybody else, and that suits us just fine. And I'm not sure if that's an accurate appraisal, but it's pretty hard to judge where you sit with your competitors out there when they don't come across with recoveries. And recoveries are important. If you only get an 80% recovery, it's not a total solution. So I couldn't be more optimistic about the coming year. The company has been trading good volumes ever since we got the Bloomberg article, and we're base building here in around the 30-cent range. We're starting to pick up some volumes in Germany, which we never had before on the Frankfurt exchange. One day we had 570,000 shares trade over there. So, the company is starting to get talked about. This week I even had a recycler that's got 6 or 7 plants around the lower mainland here come in and spend a couple hours with me wondering how maybe perhaps some synergies could work, such as they gather batteries and everything like that. There could be some definite synergies there. But what I'd like to point out is that when we do have a 100% solution, that would be to the battery manufacturer's benefit to do business with us. Not send it to a recycle yard where, it's out of sight, out of mind. But the fact of the matter is, if it's being burnt, it's not solving, it's not adding to the clean environment, and it's taken away from it. So we want to be able to add to the bottom line when it comes to environment. And that's exactly what's happening here. And you'll see next year is going to be a very busy year for the company. And, this year we might have a couple of releases coming out. But it's next year that we're getting all geared up for hopefully getting really into gear in, for early February. So get that pilot plant going. And, everything is much smaller scale, Jim, when even the pilot plant's going to be a lot smaller scale. Some people will remember the pilot plant we built for the manganese ore, and this thing will be about, 20% of that size maybe. Not 20%, maybe I should say 4 or 5% of that size. So, because you're working with 100% material, you're not working with 2% material, so you don't have this gigantic flow of material going through the system in order to get out a pound of metal at the end of the day. If we got 20 pounds going through, we'll get 20 pounds of metal at the end of the day. And that's just a total different scenario for us. And of course, you can understand that capital costs and OPEX costs will go down similarly. So it looks like 2017 is going to close out as a great year for the company and a great year for the shareholders. We started out a little over a year ago with a market cap of $2 million. We're at $45 million today. And, certainly people that got in at the bottom, and certainly people that held their stock are feeling a lot better about their investment today than they were a year and a half ago. And, I'm going to wish everybody a Merry Christmas and a Happy New Year. And I think that we can look forward to a very hot year next year, especially since recycling will become as much talked about as cobalt.
Larry, the price of cobalt has been skyrocketing. Is it important that people know there's an alternative source, recovered cobalt?
Well, yes, it's very important, and this is what some of these articles are picking up on. And cobalt, hit $75,000 a ton the other day. Don't forget, we started out around $25,000 a ton a year ago. So that is very significant to the future of companies that are involved in that aspect, whether they're miners, recyclers. Anybody involved in getting cobalt to the market is going to benefit.
And Larry, for new listeners, perhaps just outline what American Manganese does.
American Manganese is a critical metal company that developed a patented proprietary process for taking low-grade ores of manganese, 2 to 3%, and being able to produce electrolytic manganese metal and electrolytic manganese dioxide for the batteries at a similar cost to China. And, so that was a breakthrough technology, very disruptive at the time. It was something that the U.S. worked on for 80 years and could never quite get there. And, but Chemetco broke the back on that one and, got us there. And, with Chemetco's guidance, that's why we're in the recycling business. Now, American Manganese has a website out there that's AmericanManganeseInc.com, where you can follow what the company's been doing for the last couple of years. And you can get a hold of me at Reaugh, R-E-A-U-G-H, at AMYMN.com, and or phone me at 778-574-4444.
Larry, where are you traded and under what symbols?
We're traded on the Toronto Venture Exchange under the symbol AMY. We're traded in the U.S. under the symbol AMYZF. And we're traded on the Frankfurt Exchange under the symbol 2AM.
Larry, thanks for the update.
You're welcome, Jim.
We've been speaking with Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard. We were speaking on December 15th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. I'm speaking with Greg Johnston. He's the president and CEO of Carl Data Solutions. Welcome to the show, Greg.
Thanks, Jim.
Can you tell us a bit about Carl Data Solutions, what you're up to, who's involved, and your major projects?
Sure. Carl Data Solutions was brought about really because of the data revolution that's occurring, and that's the increased amount of data that's being produced primarily because of the Internet and the Internet of Things, and that's the connectivity of all sorts of different devices together. There's billions of records that are being produced, and they all need some place to go to be stored. And the traditional storage relational database management systems are being overwhelmed. There's a new wave of applications that are required to actually collect and store this data, and also provide analytics for the users. So Carl Data Solutions was built on new technology, NoSQL technology, which allows us to be infinitely more scalable than the older technology, the relational database management technology. And from that, it's templatable as well, so we can move our applications and collect data from many different verticals. It doesn't have to come from one particular industry. Rather, we can provide solutions for many industries.
Can you maybe mention some of those industries for us?
Sure. We got our start, and we're growing by acquisition of companies. Our first acquisition was a company called Flowworks. Flowworks was very heavily involved in supplying water and wastewater management, monitoring, alarming, and analytics solutions to municipalities and civil engineering companies. What we did was we purchased Flowworks. We replaced the back end of their application, which was limiting for them, and we put in our own back end application. And then the customers, what we started to do is release new features to the customers. What this allowed us to do was get much more functionality out of the application, and of course, we're able to now collect more data and sign much larger clients without the fear of latency with our users using the application, or the application basically breaking down because of the overload of data coming into it. We're also able to put our machine learning features, build them right within the application to save users time and generally increase operational efficiency across the board.
What is big data as a service?
Well, big data as a service is the templated back end that we've built to collect all this information that's being generated these days. Is not something that a lot of people can just build. There's not a lot of people out there that actually know how to construct these systems. So it's not like Microsoft SQL Server or Oracle or IBM DB2, where you can build a storage structure that can accommodate this stuff. This is completely different. It requires a completely different skill set. Our group is a group of data scientists, and they all work from the back-end infrastructure is created from this group. They're based in Gdańsk, Poland. We have 6 gentlemen that are there and work from there, and they've created and run and maintain and expand on our machine learning, data analytics, and our collection and storage infrastructure.
Can you maybe explain what the industrial Internet of Things is and why it's so important to have somebody manage it for you?
Sure. Practically everything that's being produced or manufactured these days has some sort of sensor on it. It creates everybody's heard of smart devices. The same that's happening in the consumer space is also happening in the industrial space. So what's happening is as the cost of the hardware to monitor and measure things is coming down, more and more cities, companies, all sorts of different businesses are putting these sensors, purchasing this hardware, putting these sensors and monitoring equipment into their infrastructure and on their existing equipment to let them know things like when there's a failure, or in the case of predictive analytics, in which we provide when there may be a failure in the future based on history or an environmental event or something that may impact their infrastructure. Now, the more and more of these devices that are being built and generated and put into these systems, the more there is a need for a system like ours to be able to collect that data and then be able to display or provide actionable insights to the end user, as opposed to just buying the hardware, putting it in place, and then having all that data flow into a log file. and expecting an analyst or an engineer or somebody to come in and make sense of a bunch of log files.
So it actually interprets the information it gets.
It does. It does. It aggregates information from multiple different sources, puts all that information together, and then it displays it to the user in the format that our customer wants. So some customers will be using dashboards. Some customers will be using our full-on software as a service applications. Other customers would prefer just to have a web service. So that's truly a big data as a service operation in which we receive the information, we manipulate to consolidate the data that's coming in, we provide any machine learning algorithms that are required to alter the information, and then we provide the customer with a web service to collect that information and import it right back into their enterprise system.
What kind of industries would Carl data be good for?
Everything from right now our focus is really on, in addition to water and water management, we're working with in mining. We've just done a deal with Tech Resources to do tailings ponds monitoring. We're working with utilities. We're working with some oil and gas companies. There's lots of different applications for what we do. Basically, anybody who collects data to monitor and protect their infrastructure, we can work with. It's not basically confined to one particular vertical. Our guys that build out the systems in the back end really aren't confined to their domain expertise, isn't confined to one particular category. Rather, for them, data is data, and as long as they know what's important to our customers, they can adjust the system to be able to produce the results that the customer needs.
Every job is a custom job?
Not necessarily. So some are custom. Usually most clients require a degree of customization, but for a lot of customers, just the collection of the data and the aggregation of the information in one spot so they can see their data all collected and put into one time series analysis application is enough. It's a quantum leap forward for a lot of clients that we deal with who haven't had the system or the ability to be able to consolidate all their data sources in the past. But I would say probably about 80% of our clients do require some customization.
Have you received any government help of any kind to improve the applications?
We our Gdansk office is fully incorporated, and through that office we have received an EU grant for approximately $500,000 Canadian. The grant is focusing on anomaly detection. So most of the devices that I spoke about that are attached to infrastructure have inherent flaws in them, and the flaws could be batteries going dead that power the sensors, or if it's something measuring stream flow, for instance, a stick could get caught into it. But these are all things that introduce what we call bias or anomalies into the data sets that are used to create models that the engineers produce and the decision makers need to know what's going on with their enterprise. What this grant is focusing on is the development of an automated anomaly detection algorithm that we can use to interpret the information as it comes in and flag and fix anomalous data. And it's very exciting because if you think about if you think about what most of these people are doing in creating their models, 90% of the time it takes, 90% of the total time is actually going through these data sets and getting rid of this anomalous or biased data. Only 10% of the time is actually done creating the actual model. So what we're doing is that we're saving most companies and municipalities and water districts, etc., a tremendous amount of time by introducing these kinds of features into our system. And we're very excited to be working with the university in Gdansk to be able to put this in place. That university that's close to our office in Gdansk has been working on and studying water systems and sensors that work with water systems for decades. So we have great partners in creating these new features in our applications.
I know people who live near mines quite often are worried about how safe the tailing ponds are. Would this make them a lot safer?
Yes, our application, we believe, decreases the risk significantly for tailings ponds and mines. The reason is what we do is we take into account dozens of different data sets. We work with a hydrologist, a civil engineer, to produce an algorithm that is focused on one particular area for that particular site that we're working with. And what we do is we also provide a lot of different predictive models into the mix, and so we can look 7 days into the future, and we can run all the historical, the current information, and then the future projected or forecasted information, and we can say, putting all this together up to 7 days out, is there going to be a negative impact on the infrastructure? And what that does is it provides the mine site or the dam operator with some advance warning as to whether they have to move men and equipment around to make some changes to be able to prepare for any future event that may impact the dam.
Now, can you use Carl Solutions as well for, say, solid waste management or industrial waste?
Absolutely. As I mentioned before, our back-end infrastructure was built to accommodate any data from any different source, and so we actually have a pilot project going with a local company here in Vancouver called Peak Disposal. And what we're doing for them is giving them insight into how full their solid waste bins are, or their bins, waste bins, and what that allows them to do is they know exactly when these bins need to be emptied. This is a great value to them, of course, because you don't have contractors filling these bins up to 125% capacity. Rather, they're only filled to 100% capacity, and the bins are immediately taken away. It allows the solution should allow Peak Disposal probably to get a couple of more turns on the bins that they're renting out to their customers. It'll also ensure that they don't get charged any additional fees for overages when they take these bins to the dump.
So it looks like you're really concentrated on efficiency and safety.
Absolutely, operational efficiency and safety is risk management are the two things that we're very interested in. Anything to do with we feel environmental monitoring is where you can squarely put us, and we're trying to provide a turnkey solution for companies, a company that they can come to and not have to hire several different companies to put together a solution for them, but rather come directly to us and we'll put the solution in place because we have the hardware and the software and the applications to be able to deliver a turnkey solution for them.
Greg, where is Carl Solutions traded and under what symbols?
We're traded on the CSE, symbol CRL. We're also traded in Frankfurt, the FSE, symbol number 7C5, and we're traded on the OTC, and the symbol there is CDTAF.
And what's the easiest way to get more information about Carl Data Solutions?
Easiest way to get more information on Carl Data Solutions is just to simply email info, I-N-F-O, at carlsolutions.com, and we'll get in touch with you immediately.
Greg, thanks for the update.
Thanks, Jim.
My guest has been Greg Johnston, President and CEO of Carl Data Solutions. We were speaking on December 15th. I'm Jim Goddard.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Company Showcase is a production of Howe Street Media Incorporated. Welcome to Company Showcase, an advertising feature on howstreet.com.
I'm Jim Goddard. I'm speaking with Jim Pettit, CEO and President of Aben Resources. Welcome back to the show, Jim.
Thank you very much.
You just brought out a new news release. Can you tell us about it?
Yeah, it's the it brings up the Chico project in Saskatchewan, which we intend to drill this winter, actually in February. It basically gives us something to do through the winter. Because the Golden Triangle is basically all but shut down now. It has a relatively short season, 4 to 5 months. We ended that program back in the end of October, beginning of November, with a news release basically showing the world that we've got a discovery there. We've got to go back next year. It's going to be a big year. We've discovered a zone that... it's a very broad zone. It's, let's call it 100 meters wide. And all the three holes that hit it all have a narrow, high-grade core that varies up to, 14 meters wide. So it's a big, rich core. You've got examples would be 10.9 grams over 12 meters, 2.9 grams over 14 meters, and 6.7 grams over 10 meters as well. But those were very highly mineralized. One of them was actually, it was about a quarter gram over 380 meters. So it's a big zone, and it runs across the Forrest curve, like basically cross-cuts the Kerr fault. And that's what you want to look for. That Kerr fault acts like an engine for the region, and it's it's a massive fault. So you get these splays that come off it, and you could have real good high grade gold, real good high grade silver. You're going to get copper. You can find all kinds of interesting things there. But that season's ended. The market basically sells off at the end of the season up there, as we did, as a few of the other companies have done. And now we're looking at Saskatchewan. We're gearing up for that now. I've just done a very large IP survey. I'm just getting, and I'll put on the website soon, the 3D version of this IP survey. It coincides and coordinates very nicely with all the historic work that's been done on the Chico project. It's going to be coincidental with a lot of the old and historic and even sampling from the last few years. There's trenching. The sampling is extremely, what would you call, highly anomalous. Even the historic numbers are.
The historic drilling is very good. You've got quarter ounce and half ounce intercepts from way back in the days of Corona and when Cameco was looking for gold and that sort of thing. This project is located just south of the old Claude Resources ground, which has now been bought by Silver Standard, and they've now picked up all the ground between the Chico project and the CB and Santoy deposits, called the Fisher project, and they look at that as tremendous exploration upside because you've got this big regional structure that runs north-south called the Tabinor Fault, and you've got all these splays coming off it, not unlike the Forrest Kerr Fault or the Kerr Fault in the Golden Triangle. So we've got locations ready to drill. We're just doing a few more things to make sure our targets are as good as they can be. And then we're ready to go in February.
Jim, for people who have just tuned in, can you maybe give us a bit of a background about Aben Resources?
Well, Aben Resources it's a gold exploration company, mineral exploration company. We've got 3 great projects. The Forrest Kerr, obviously, in the Golden Triangle, will be our primary project. It'll be a big project next year. The Chico project's in Saskatchewan, very favorable jurisdiction for exploration. And then we've got a 3rd project in the Yukon tied right on to Golden Predator. It's called the Johnston project, and we did a little bit of work up there this summer. I've got a news release coming out in the next couple of days that'll describe what we did there, but we have, through a sampling and trenching program, we've come up with what we think is going to lead us to a very high-grade hydrothermal vein system, and we're really quite excited about it, and it won't be unlike maybe what they found at Three Aces, so we'll see where that takes us.
Jim, can you tell us where Aben is traded and under what symbols?
We're traded on the TSX Venture Exchange under the symbol ABN, and the pink sheets in the States, in the United States, ABN.V. Excuse me. We've got about 53 million shares outstanding, and I am just putting finishing touches on the new numbers for the fully diluted, but it should be around 80 million. We've had a lot of warrants come down.
Jim, how can people contact you and get more information?
I can be contacted at or through info@abenresources.com. The website is www.abenresources.com.
We've been speaking with Jim Pettit, CEO and President of Aben Resources. Thanks a lot for the update, Jim.
You bet. Thank you anytime.
We were speaking on December 12th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Company Showcase is a production of Howe Street Media Incorporated.